Well, what you wish for earlier, we were like, wow, there's nothing going on in the futures. We're down 20 points on the Dow, and we had just fractional losses. And here you go. It has turned into this. Tom Lee, significant declines now, especially after what happened last week on Friday. Tom Lee's here, Fundstrat Global Advisors, Chief Investment Officer and a CNBC contributor. This is not this is a Grinch rally, or the Grinch sell-off. This is not a Santa Claus rally. It's not going as planned, Tom.
It's not. I think investors have been a bit nervous since December 18th, the FOMC rate decision, and worried that the Fed may not be as dovish as investors previously thought. But I think fundamentals have remained intact. So to us, I think this is a bit disappointing, but it's, I think, a bit of profit taking, some hesitancy around the Fed. But I think it doesn't really change that 2025 is shaping up to have a lot of tailwinds.
So this just delays some of the continuation in a secular bull market that you've been talking about?
That's right. I mean, I think one of the lessons of 2024 has been we've seen periods of market wobbling and weakness. We know investors get pretty quick to turn bearish when that happens, but it turns out that these have all proven to be buying opportunities. I don't think there's a lot of signal to me that December's been a weak month. It is obviously disappointing because it should be a seasonally strong period, but if we end down even S&P 5900 into year end, I don't think it just changes that in 2025. There's a lot to look forward to.
So what you thought might happen this year being put off. So what does that mean for next year? Let's say the first half of next year. What do you think we're in for? And with valuations and where multiples are right now, with all that in mind, do you think it could be a really positive first half of the year?
I do think that one of the things that we're watching most closely is what happens to CEO confidence early next year. We know they've been cautious for the last 2.5 years. It's really evident in looking at measures like the ISM manufacturing that's been below 50 since October 2022. And that's highly correlated with S&P earnings growth. I do think that that's going to finally recover to above 50, kind of signaling that we're back into an expansionary CEO mindset. It is purchasing managers. On top of that, we have an incoming administration that ultimately is going to be viewed by markets as pro-business, and I think that reignites animal spirits. And I think the Fed is going to prove to be dovish, even if they're trying to figure out where neutral is. They're still supportive of markets. It's a good combination for I think upside for equity. So, in the first half of next year, I think S&P can get close to 7,000, and that's a lot of upside from here.
7,000. You've made some prescient calls about inflation, or about the markets based on inflation. Do you think recent worries that it's reheating are misplaced right now?
I do think inflation worries are misplaced. I know there's a lot of folks calling for a resurgence of inflation, and I know for whatever reason January typically doesn't seem to be seasonally adjusted away, so we could see what looks like a surge in January CPI. But to me, the drivers of inflation are wages, and the Fed has said the labor market is not in a place that is inflationary. It's shelter, and we know shelter is really just catching up from the gap between where market prices are, which is not as inflationary, to how the statistical adjustments get CPI to where that needs to be. And we know auto insurance has really distorted CPI to the upside for the last few years, and that's cooling. So unless there is a supply shock coming, I don't know exactly why we would have a second wave of inflation. So to me, I think there's downside risk to inflation in 2025.